Welcome to Treasury One's Market Review, and what a difference 1 week can make. The ZAR found itself on a stronger foot this past week, trading back below 19 Rand to the US dollar. Now, in the absence of any fundamental changes, it's difficult to pinpoint exactly what gave the Rand its boost. It could be that markets found new value in the currency. Then the reduced load shedding levels certainly helped to lift spirits in what has been a welcome relief. Eskom's energy availability factor is back above 60% for the first time since August. Now, this is partly due to maintenance being reduced to the absolute minimum and wind energy picking up as it usually does in the winter period, and that's due to cold fronts making landfall in the Western and Eastern Cape. Now, as for the week ahead, the Rand is set to take direction from the Federal Reserve's interest rate decision. The evidence of a slowing US economy has been slowly stacking up. Last week's uptick in jobless claims, along with a weaker ISM services PMI, will all add to the Fed's considerations, although market consensus holds that the committee will hit the pause button and allow the tightening it has implemented so far to filter through the rest of the economy. Over in China, authorities seem to be hinting at imminent policy support to give its economic recovery follow the country's lengthy COVID lockdown a boost. Last week's trade data suggests global and local demand is weakening, so China's authorities asked big banks to lower their deposit rates, and that's signaling that the central bank is preparing for some monetary easing. There were some Q1 GDP figures released last week as well. The EU found itself in a technical recession, and although the economy is weaker, it's far from crashing, and in fact there may still be some room to hike rates further as the bloc aims to ease sticky core inflation. South Africa also saw its figures released with a slight expansion of 0.4% quarter-on-quarter, and although it managed to avoid a technical recession for now, ETM still anticipates a recession for the year as load shedding continues to puncture any dreams of economic recovery. More South African data out this week is mining production for April, which has been contracting for 14 consecutive months and remains at near record lows. ETM is expecting an expansion on a year-to-year basis in the latest print, but that's due to base effects linked to the comparison against a weak base a year ago. Now, retail sales for April will also be out on Wednesday, with a further contraction anticipated as sales continue to be weighed down by the cost of living crisis, pessimistic consumers, and a generally weak economic outlook. Apart from the Fed's announcement, other US data we're looking out for is May's inflation figures out on Tuesday. We're expecting the data to reflect the cooler economy. Germany is also set to release its latest CPI figures, with a deceleration in headline inflation expected as the tighter monetary conditions work its way through the economy, dampening demand-side inflationary pressures. And speaking of which, the ECB is scheduled to update the bloc's interest rates on Thursday, with the consensus being a 25 basis point hike, pegging rates at 3.5%. Markets will be looking for any signals that the bank may be coming to an end of the hike cycle. That then the week that was and the one to come for the markets.